Okay, thank you. Good morning. Good morning, dear students. We assemble here for one more class on audit. So we will continue a little bit with the bank as I promised last time, day before yesterday. And then we will move on to the company audit. Okay. So two things which I said I'll discuss was the concurrent audit and audit committee. Audit committee will be discussed in the company audit. So here let's talk about a little bit about the concurrent audit. Sorry. So what is it? Those who have done work in bank, I mean, you know that there is a function of concurrent audit being carried out by the auditors or a member in practice. So it is basically to review the transactions, on an ongoing basis. It is done on an ongoing basis. Just give me one. So on an ongoing basis, the audit is done, and on a daily basis, almost the transactions are checked by the independent auditor, who is a concurrent auditor. So why is it done? I mean, why, apart from the statutory audit, the yearly statutory audit, why is this required? As I told you the other day, if you remember, that, in a bank is such a service, banking business is such a service, the post-mortem audit, or the audit of the historical financial data, after the year closes, is sometimes may be very costly, sometimes may be very, very costly. So to ensure that any transactions which could be of fraudulent nature, may not be correct, are identified and adequate corrective actions are taken on them as soon as possible to ensure that such kind of errors, it may not be always fraudulent with fraudulent intention, it could be errors. Such errors, whether done, intentionally or inadvertently, are actioned upon so that they do not recur again. That's the basic fundamentals behind the concurrent audit. So concurrent audit is an integral part of the banking system's internal control functions, internal accounting functions, and effective controls, and is regarded as a part of the bank's early warning system. You remember I had been talking about early warning signals. These are early warning signals that something which has, something is just probably at the tip of the iceberg. So this kind of transaction which has happened once or twice during the particular month could give rise to a major problem if not checked, if not contained, right? So it is kind of an early warning signal, and most of the banks, they have this concurrent audit function. Doesn't necessarily have to be done by chartered accountant firm. It can be done by internal inspectors of the bank also. So if they have that kind of a capacity, and in most of the cases, they are a mix and match of the both such situations. Some are done by chartered accounting firms or chartered accountants, and some are done by the inspectors of the bank. So it's basically an early warning system to ensure timely detection of serious errors and irregularities, which also helps in averting the fraudulent transactions and preventive vigilance in banks. So prevention is important. Only detection is not good enough. That's, you have to, when you write the exam, attempt the paper, be very careful about these small words. We need to prevent. If something has happened, you have to detect it, then only you can prevent it. You can't prevent if you can't detect. All right. One can think that, well, internal control is there to internal controls are there to prevent. Yes, they do. Agreed. But how do one ensure that they are working in, on 24/7 for 365 days? May not be. So that's the reason a continuous monitoring is important. And one of the monitoring mechanisms is the concurrent audit to identify, detect, correct it so that it is prevented for future, recurrence. So which are the areas one has to look into? Naturally, the most important areas, I have taken a couple of them. Cash transactions, including physical verification of cash, it's very important too. As I told you, cash is the inherent risk of cash is that it is susceptible to theft, right? And so one has to have a lot of controls over that, and you know that internal controls are there, that one person cannot handle it. It should be kept in in a locker under dual authority. The key to that locker should be with two individual person in the bank, one officer and maybe one clerk, whatever the segregation of duty principles there, but it has to be in the joint custody, not in the single custody. So these sort of things are there. And physical verification is important because in spite of having these dual custody and responsibility, with a collusion, some fraud can take place, and which can only be identified through surprise cash checking and all, and statutory auditor is not supposed to do that as part of the scope, so it is done by the concurrent auditor. And it is always, we must remember as auditor, that the cash verification should be a surprise check. I mean, if we tell them that we will do the cash verification tomorrow, it is better not to do it. Is it as good as not being done? Okay, so it has to be an element of surprise should be there, so that they cannot cover up the irregularities that's going on. Otherwise, the fundamentals behind the cash verification will be lost. Loans and advances we discussed in detail. So in the concurrent audit, basically we need to physically check whether the securities are in place, all the documents, legal documents that's been executed are in place, and they are being executed by the competent authority. They have the power to do so. The delegation of power need to be important. Many cases I have seen whether the auditor doesn't have the delegation of power data with them. So how do you know that it has been approved by a competent authority when the auditor is not aware who's the competent authority? So these are serious irregularities from the audit perspective. So as an auditor, it is absolutely important and must that they should have the list of this who are the authorities, approving authorities, depending upon the transaction, the nature, the value, etc. Charge creation, very important. Charge is created by, maybe by another bank, consortium bank. This bank is just part of that consortium. So whether that charge has been created within the time as per the loan covenant, and if not, what is the impediment behind such loan charge not being created? These are the things one has to see. A concurrent auditor, generally, it's not there only to check the voucher. No, it's very serious. And we can be really taken to task if we do not do our duty well. End-use verification of the fund, it is important. The loan and advances cases, that it is meant for, it's a working capital. It is a working capital, cash credit has been taken. Whether actually it is being utilized for such purpose or it is being personally used. There could be so many cases. I have seen cases like Kishan credit card. Kishan credit card doesn't carry that much, carries a very low rate of interest. And naturally Kishan credit card is meant for agricultural business. And during the scrutiny, during the audit, I observed that it is being used. One such credit card is being used to purchase gold, gold jewelry, not from here. They went to Dubai, for the gold festival takes place. And they had gone to Dubai and to purchase gold with the help of these Kisan credit card, amazing examples. Things come out, and this becomes a case study later on. But these things do happen, and this is not the end use of the fund for which it was given. Monitoring of accounts with excess drawings, absolutely important. As I said, that the banks are supposed to give temporary overdrawings to customers, to genuine customers, and it should not be a rule that we will otherwise it becomes an accommodation, because why you are accommodating? Why don't you increase your level, credit level, where the customer, the borrower very well know that their credit worthiness is not that much, it cannot be enhanced. So they somehow manage with the bank officials that please give us enhancements, daily enhancements, and otherwise we will take away our account to some other bank. And this is one of the no one wants to lose a customer, right? So but one has to have a balance. At what point one can say that, well, we can't give you, or you charge additional penalties, you give additional securities. It is not only about the penalty is, well, they will say we will give you the that charge, but that also you are basically funding, so there is no big deal. But the thing is that if somebody is drawing in excess, have they given you the collateral? The one has to remember about the principal amount. Okay, one has to remember the principal amount, because in this case, must remember, for the cash credit part, the interest is also being funded by it is being charged from that current account. So his drawings just becomes a little less, that's all. But he is not paying any cash. So no cash outflow from the borrower actually. So collateral is very important. So those kind of things you must keep in mind. Continuous monitoring of the projects and etc. Other things, okay. Adherence to the case, KYC, asset management liability guidelines, including monitoring of the transactions in accounts, compliance with the foreign account tax compliance, and common reporting. There are so many things one has to keep in mind. And new account staff accounts, reporting of the SLR, CSR, CRR, etc. Those kind of things are very, very important. Remittance, bills for collection, including the SWIFT transactions, monitoring of the overdue statements like bill purchase, discounted, negotiated, etc. At what rate it has been discounted, why it is overdue. The bill has been purchased. That means the borrower has got the money, but the bank has not recovered. Okay, so why is it so? Has it not been so? On what basis such bills were purchased or discounted? So these kind of things are regular nature of review. And whoever does it, as I said, that these are serious affair, and generally a firm gets it done by their students. So it is very important that the audit planning, planning program should be very, clearly defining all the requirements. The students should be trained to look into this. It is not like that, I'll hand over a checklist to my student and will ask him to do the work. No, I cannot expect him to do that. And later on you cannot really tell him that why you didn't do it. It's not my fault, it's your fault. No, you can't do that. So adequate training, guidance, once in a while, once a week, twice a week, the senior member of the firm or a partner should visit and review what's going on, what work has been done by the staffs. So these things are very important for all aspects. It has to be broken, that all aspects, and there is a checklist provided by the bank that what are the things that needs to be covered. Most of the banks, they do that. These are the things that you need to cover during the monthly monthly concurrent audit. Recovery of the debt. It has become NPA, or its early warning signal says that the condition of the advance is not good. So what additional steps are being taken by the branch to ensure that they do not turn into a bad asset? So whole lot of areas are covered. Housekeeping, including reconciliation of accounts. Reconciliation, I told you, sub-ledger versus the general ledger. The small things, that whether some reconciliation is pending, how would you find out? If some amount is being parked in a ledger which is which is not like in a memorandum kind of a thing, or a miscellaneous nature. So those GL should not have any balance ideally for more than 1 day, 2 days maximum. and monitoring of the general ledger, sub-ledger, subsidiary ledger, parking accounts. Parking and posting are very important. They are parking it has not been posted. So out of balance, parking is not posting. Please keep that in mind. You have just parked there, posting has not happened. Is there any account balance lying in that parking account? So those kind of things, the nomenclature should give you an alert, in your mind, in the mind of the auditor, that these are not in the normal practice, and one should review it. Treasury operations are important wherever it is. If it is a treasury business, treasury branch, non-fund business, like I told you, guarantees, letter of credits, etc., etc., and of course foreign exchange transactions. If the branch is permitted to do the foreign exchange transactions, if it is not allowed to do foreign exchange transactions, how the customers are taken, catered to. If they want to transfer some money, some processes will be there through, where they accept it in Indian rupees, but transfer the transaction to the foreign exchange branch through which the transaction would take place. So one has to see whether the transaction is actually terminated at the branch, because they are not permitted to do so. This is not a foreign exchange, they are not permitted to do any transaction in foreign currency. So it has to be essentially in INR, in Indian currency. But then they forward it to, their treasury or their foreign exchange branch, where it will actually be completed. Or they have some third party arrangements. There are so many arrangements today through which you can send, you can receive a fund from foreign countries, individual level, I'm saying individual level also, and can send fund. So those kind of things one has to take care of, because the RBI guidelines are very strict about this. The clearing of the transactions, if anything's lying uncleared, what are those cases? These are all part of the reconciliations, clearing transactions and unclear transactions. Verification of the merchant banking business, if any. Verification, many kind of merchant banking business are done by the banks today. So if the branch where the concurrent audit is being taken place, whether they are doing such kind of merchant banking business, giving additional facilities for the corporates. Some corporates are there. So cash handling for the corporates, for the retail business, some retail corporates are there, and you are just that this branch is working as a cash collecting agent, and there could be many other things, that paying salary accounts are there, making payment to their vendors, whole lot of merchant banking business activities can be done by the branch. Various operations are offered, various services are offered by the banks today as part of merchant banking business, and as an auditor, you should be looking into it. And of course, verification of the, credit card, debit card business, if it is a branch is specifically handling that. If not specifically handling in that, how all the branches would have customers who are having debit cards and credit cards. So how the debit cards, credit cards are distributed along with the, their pins and things like that. So there is a checklist that how they should be handled. So as an auditor, it is important for us to see whether such, operations are as per the norms, defined norms, within the defined norms. Compliance with the guidelines. This is absolutely must. There is no leverage in this or leeway in this, that we have to follow the RBI guidelines and internal policy guidelines also there, which will be developed based on the RBI guidelines. It is important many times for the auditor to see. I have seen this happening. Internal guidelines are somewhat little different from the RBI guidelines. We cannot accept that. We have to have, we must ensure that the internal guidelines, internal policies are in line, are in compliance with RBI guidelines. So RBI guidelines is the kind of the sacrosanct document. Based on that, you can have more strict internal policy guidelines. That's okay, but you cannot have a deviation from the RBI guidelines as your internal policies, because many times the bank will say, no, this is our policy and procedure. So it is important for an auditor to understand whether the internal procedure is as per the RBI guidelines. So certain things, the appointment of the auditors is actually the responsibility of the bank, but it is absolutely essential that the auditors must be, are empaneled with the ministry, with the central government, and also by the Reserve Bank. So we have to have that empanelment. Otherwise, list is not considered. The name is not considered in the list. So though it is only the sole responsibility of the bank to select the concurrent auditor, but they do only give such audit to auditors who are empaneled, with the central government as well as with the Reserve Bank of India. So that's so these lists, they get it from verified from these two places, the bank. So appointment cannot be given to anybody else. Accountability. So the accountability, generally when we get the job, in the scope it is written. So what is the accountability? What would be the accountability of the auditors? I mean, because there is no such, statutory liability on us, but there should be some accountability. So that accountability is fixed by the branch, and we must follow that. Otherwise, if not anything else, we will be guilty of misconduct by the ICI's rules and guidelines. Okay, ICI's Act. So it is important for us to be careful about that. The tenure is generally, it can be, I mean, there is no hard and fast rule. It can be for 6 months, it could be for a year, renewable again depending upon, and it is renewed basically based on the performance. So many times it happens, in the middle of the term, the audit has been given for an appointment has been given for a year, but because the performance was not as expected or as envisaged by the bank and the branch, they may give appointment to somebody else also. Okay, or somebody has resigned from that because that auditor has got other better job in the bank, maybe a statutory central audit he has got, so he would have to give away the other audit, like including the concurrent audit. So there is a vacancy, and it has to be fulfilled by the somebody else. Swift, Joe's, good morning. Swift account is basically, it's a process through which money is transferred internationally, through the currency is different, not within the Indian exchange is not in the Indian currency. It is between the foreign currency and Indian currency. SWIFT, it is an international, I am forgetting the full name. I'll tell you, it's a big name. I'll just tell you what is it. SWIFT, full form. I'll tell you the full form of SWIFT. Just a minute, huh? Society of Worldwide Interbank Financial Telecommunications. Okay, it is an international, it is basically an international arrangement. You can say it's an international arrangement. It is a member-owned cooperative kind of an association that provides safe and secure financial transactions of its members. So, bank has to be a member of that cloud, okay, that cloud, and so that a secure transaction, exchange of transaction or money can take place. And this is an international thing. So if you're suppose you're doing some work for dollar, you will receive the money in dollar. I'm talking of individual level, not only at the bank's level. So, and it will be coming through bank. Okay, so bank is involved. Suppose you have got a job, you got some work assignment which will be paid in dollar. Now, your account in the bank is maintained in INR, right? Okay, we cannot, the individuals, a citizen of India cannot maintain a dollar account, okay? Unless and until it's, there are terms and conditions. So we will handle only in INR. So we have a savings bank or cash credit or a current account, whatever. So which is in INR. We cannot withdraw dollar for use here, for purchase here, for something. That's not allowed. That's not allowed at all. So we suppose, so in such case, what will happen? It has to be routed through a the Swift cloud. So you have to give your account details along with the details of the foreign exchange branch, details of your bank, which may not be the branch. Okay, so in a particular, say, branch A, bank X, there will be branch who's handling the foreign exchange transaction. So you have to give the your customer from whom you will get the money these details, so that from his account it will be transmitted via various loops and come to the foreign exchange branch, and then only it will come to your account in INR. So till such time between this money comes and lands in India, it is actually handled by the Swift. So Swift codes are there, separate Swift codes are there, which we have to give. Many times what happens that we just give the details of the foreign exchange branch will be enough. Rest they find out what is the Swift code. The two branches dealing in foreign exchange, foreign currency, they will handle that. But Swift is basically, it's a global kind of a cooperation between members for easy transfer of fund and in a secured way. So keep that in mind. So we need to be careful about that also. Okay. Okay. And remuneration tenure, as I said, remuneration is generally fixed by the bank and can vary from bank to bank. Review and effectiveness of the concurrent audit. So one has to submit the report monthly. There are quarterly submission of reports and things like that. And many times quarterly, they say for a quarterly report, which could be a conflict, which could be give rise to a conflict of a statutory audit also. Because if you remember, complicated case study may come. So that's why I'm telling you this. Please remember that if you're an auditor, if you're a concurrent auditor, you cannot do a statutory audit, right? Now, statutory audit is done in any bank who's listed. Every quarter, limited review takes place. Yes, empanelment is required. Joe's empanelment is absolutely required. Without that, cannot be done. So, what happens? A concurrent auditor cannot do a statutory audit, right? So, during the limited review, which is done every quarter, how he can do the specific audit of that branch where he is doing the normal concurrent audit? We have to be very, very careful about the report that we give. It should not be, we will not give any audit report. We can do the audit, but we cannot give an audit report in line with the limited review. We cannot do that. The bank says that generally the top 20 branches, top 20 in terms of advanced portfolio, are being audited every quarter. But it's only top 20. There are 1,000 branches. What happens to those 1,000 branches? Because they will be consolidated anyway, isn't it? At the quarter end, even for limited review. So who's going to do the audit for that? So what the banks generally tell, the concurrent audit, if it is going on, you also review it and you give a report. But if it is done by the concurrent audit is done by the member of the institute, we have to be very careful that we do not give any report of such kind which will give rise to a statutory audit report format or kind. That then it is a major violation. Then it's a major violation. We can't do that. So from the exam point of view, please remember that we can review in the normal way and can give the report, and we must not give the report directly to the statutory auditor. Let the branch give. All right. So that we will give as part of the branch audit, but we are just the concurrent auditor. So we must know our limitations, boundaries within which we have to work. So many times it happens. Reporting. Whom do we report to? We report to the branch and quarterly reports are sent to the regional office, if not to the head office. And contents of the reports, the findings of the concurrent auditors must be received in a structured format prescribed by the bank. This can vary, but they generally follow a normal process, normal accepted format, and we will give a report, our report in that. And in case we find some additional reporting is required, you can always give it in a, later format. There is no hard and fast format for that. Minor irregularities pointed out by the concurrent auditor shall be rectified on the spot immediately. KYC not taken. KYC is not there. Withdrawal happened, but KYC is not there. That can be corrected. I mean, it is not so simple as it is written on the screen. I mean, if one has to review how it can be, they will say, okay, we will correct it. As an exam, as a student who will write the exam for your case study purpose, remember it is important for you to read the question that how is it corrected on the spot, means is it corrected then and there? Is it possible? If it is something related to the say system, how can they do it? They don't have any access. It has to be done at HO. So correction at the spot has to be carefully judged that it is really possible to correct it. Say for example, some reports are not getting generated and signed by the branch head. Well, that can be corrected on the spot. That you please generate it and henceforth you sign it at the day end. That can be corrected. Okay, these are small things which can be done. So one has to be very careful that which are the things which are whether minor or how it is. How would you know it is a minor? One has to judge. Materiality comes into play. So minor, if in terms of our judgment, yes, whether it can be corrected in the spot and all, that one has to check. We should not go by what the auditee is telling us. You have to apply the judgment and see it for yourself whether it is actually feasible. Major deficiencies, aberrations noticed during the year, audit should be immediately brought to the notice of the head office, controlling office, concerned branch or business unit of the bank. It is not necessary that we need to report it to the there is no liability on us, responsibility on us to report it to the RBI or to the central government or anybody. I mean, if you find it is serious and branch is not listening, all we can do is send it to the head office, ideally in the letter format, properly mailed, and not only through emails and things like that. Documentation has to be important and definitely not over phone. Okay, quarterly review of various features. This is local management committee. This is the ACB is the, what is an ACB? ACB, I forgot. The LMC is the local management committee or audit committee. Audit, okay. ACB is the audit committee board. So it is generally we can report, our report can be submitted to the audit committee or to the local management committee. Zone-wise findings of the concurrent audit is generally reported to the audit committee on a quarterly basis or the local management committee on a quarterly basis. Whenever fraudulent transactions are detected, they should immediately be reported to the audit department, internal audit department of the head office, and also to the chief vigilance officer. Now this is for a listed company. This chief vigilance officer is a must. For the listed company, it is a must. So it has to be, so a concurrent auditor can report such fraud to the chief vigilance officer as branch manager is concerned, unless the branch manager is involved. So it depends on the situation, because immediately that vigilance will start, investigation, and follow-up action on the concurrent audit during the subsequent months need to be reviewed. Open cases that which they recommend, which you recommended something and they said that it will be rectified within so and so time. So every time the next audit when we do, we need to see whether such comments which they promised to rectify during the current period, whether it has been done or not. Okay, that will be all for the bank audit. If you have any question, you can ask me. If not, I'll move on to the company audit. So rest of the, coming 3 classes, we will be covering the company audit. So basically, these are the areas. This is taken from your study material. No? This is all taken from your study material. So these are the areas which we will cover over the period of today and next 2 more days. Appointment, which I understand you have gone thoroughly in detail about these appointments and qualifications, etc. During your inter days, but just as a recapitulation so that you remember it correctly. So you cannot take it lightly. Probably it will be required. You never know. One thing I believe, and I keep on telling the students, final students, that here you cannot even think of not reading anything. You have to read everything. Fortunately, unfortunately, you have to read everything. You cannot say that, okay, this won't come. The trained pattern is like that. This won't come, so leave it. You never know, that may come that year. So, there is no way you can do that. So you have to read it. First, auditor. I have tried to go by the section numbering. So section 139 talks about the appointment, right? It talks about the appointment of auditors. First time, so including the first time auditors. So in case of a company other than the government company, which is governed by section 139 subsection 6 of the Companies Act 2013, that it has to be appointed by the board of directors within 30 days from the date of registration. All right. So the new company, this is a new company has formed, and so they are also appointing the auditor for the first time, and it has to be done within 30 days from the date of registration by the board of directors. Auditors so appointed should hold the office till the conclusion of the first AGM. Okay, it has to be, so it could be a year, less than that, or little more than that. So till such time, the auditor will be holding the office of as an auditor. If failed, auditor to be appointed within 90 days at an extraordinary general meeting. Okay, so if it cannot be done within 30 days, the company has to call for an extraordinary general meeting, and that too within 90 days to appoint the first auditor. Comes the government company. Next is the government company. Government company, you are all aware of that. It is where the share the ownership is of the paid-up share capital is not less than 51%. It is being held by a government, by government is a government company, by the central government, state government, governments, or partly by the central government and state government, and things like that. There could be a combination. But if the holding of such ownership is not less than 51%, it becomes a government company. This you are aware of. So what happens the first time audit appointment of such government company? Auditor shall be appointed by the CAG. Okay, within 60 days from the registration of the company under section 139 subsection 7. I'm sure you are aware of this. Others have also told you. It is important that you mention the section and the subsection. Absolutely important. Based on that, the marks are given, right? Section, subsection are important. So it is really important to memorize. I don't find any other ways of remembering it. This you have to remember. There are so many, clauses, sub-clauses. This is really the tough part, but we have to do it once. Excuse me. And in case the CAG, I'm so sorry for bad cold. Weather is bad in my part of the country, and sorry, I've got some cold. So, if it cannot be appointed by CAG within that 60 days, the board of directors has the power to appoint the auditor within the next 30 days. That they can do. If failed, again failed. Okay, 90 days have passed. Auditor has not been appointed. In that case, an extraordinary general meeting has to be called within the next 60 days. An auditor should hold office until the conclusion of the first AGM. That's normal. That's normal for any audit in that matter, unless and until one is removed in between or one that to read it that way. It is better to read it by the functions. Like it is a first time appointment. These are the sections, subsections are important. Section would be the same, but subsection will change. So I leave it to you. I leave it to you, students, how you will remember. But I think this is the best way to remember. Subsequent or the reappointment of auditors. In case of non-government companies, now you see section 131 comes, section 139 subsection 1 comes. Okay. So first time is different. I mean, there is no reason why it didn't start with 1. Don't ask me that. So 139(1) subclause 1 of the Companies Act 2013 provides how auditors will be reappointed in case of non-government companies. That at the first annual general meeting appoint an individual or a firm as an auditor who should hold office from the conclusion of that meeting till the conclusion of the 6th annual general meeting. So 5 years. So you remember, please remember, thereafter till the conclusion of the for every 6th meeting. That means he is getting the work for 5 years. For you to remember, an individual auditor can get a one term 5 years, and if it is an audit firm, 2 times 5 years, 10 years. These are the things easy to remember. These are the fundamentals. So I'm sure you're aware of this. Auditor, if it is a proprietorship, he will get it for one term 5 years, then a cooling period of 5 years for reappointment in the same company. And if it is an audit firm, it is a 2 term of 5 years, that's 10 years. And again a cooling period before a reappointment in the same company. Alright. Company shall place the matter relating to such an appointment for ratification. Very, very important for you to remember for exam purpose in case it comes that even though the appointment is given for 5 years, it has to be ratified every year. It has to be ratified every year. It has to be ratified every year. So that's important. It is not that for 5 years you got an appointment and only reappointment will take place after 5 years. It's not like that. The appointment needs to be ratified on every annual general meeting. Okay. Written consent has to be taken from the auditor about the willingness. First, whether I'm willing to be an auditor, and of course my qualifications are still there. I'm not disqualified to do the audit, and certificate that whether satisfy the criteria provided in 141. We will look into see that disqualifications, and company shall inform the auditor concerned of his appointment if he is appointed. It has to be notified to the auditor, and it has to be notified to the registrar also, to the MCA also within 15 days from the meeting in which he has been appointed. Okay, so there are forms are there. So in that form, it has to be notified to the MCA. Now ratification is not important. How old is that? How old is that no ratification is required, Ranjit? If you tell me, I'll look into it. But as far as I remember, the ratification is required. So if you can give me which notification you are talking about, I'll definitely look into it, correct myself. But for your exam purpose, remember, this stands good. PPT is not able to view, it is blundering. Is it so for everybody? Subramaniam says that PPT is not visible. Is it for everybody? Or please let me know if the PPT is fine. ADT1, okay. So Satrudhan also says ratification is not required. Probably so. I don't know. I have to look into it. Which notification dated what. So remember that ratification is required. So maybe by the latest ratification it could be. I'm not sure of that. And so these are the things one has to remember. And auditor needs to give a certificate that he is qualified to take up the audit as per the requirements of the Companies Act, the relevant sections. And once he is appointed, it has to be informed to the register and to the auditor also. Okay. You don't have to tell me the notification. I'll find out and I will tell you also. So what happens when a reappointment or subsequent appointment is taken up for the government companies? Okay, for the government companies, yes, it's not visible. Jay, can you tell me some? Lot of people are saying video is not visible. Is it so? It's clear. Sudhir says it's clear. PPT blood. Is it blood, Jay?
Yeah, it's not properly visible, but it's visible.
But why is that happening? Is it because, let me see my connection. Not an issue, no? Okay. All right. So I am being told by the IT person in institute that they are not encountering any problem from my network, neither from the institute side. So probably there's some issue at your end. Could you, if you can, please check or reconnect or use some other, network connection. In case of government companies, the reappointment, subsequent appointment of auditor is by 139 subsection 5 of Companies Act, and it provides that it has to be done by the CAG in respect of a financial year. Appoint and auditor duly qualified to be appointed as an auditor of companies under this act within a period of 180 days from the commencement of the financial year and until the end of the conclusion of the annual general meeting. Okay, so here also, generally the rule of thumb is that if an auditor is getting an appointment in a government company, the CAG audit, which we call, it generally continues. If the auditor is performing well, the audit continues for 4 years. Good, thank you, Sudhir. So I think what Sudhir says that he logged out and logged in again, and it is fine. So those who are having problem, I request you to log out once and then log in. Probably it will be all good. So in case of CAG audit, generally the rule of thumb, like you generally continue for 4 years if you are performing as per the expectations within the norms. And but this is ratified every year. You get a appointment letter that you are being reappointed as the auditor for this financial year until the conclusion of the next audit AGM. So an auditor should not be very complacent. The auditor should not be very complacent that, okay, we have got a job, it will continue for 4 years. No, it's not like that. We need to perform so that, so in an AGM, we may be disqualified on the ground of non-performance. Okay. Okay, good, Jose, thank you. So rotation. Now, so this is an important area that auditors are rotated, So this rotation happens. It's not like you can, an auditor or audit firm or an auditor continue to audit in a company forever, as long as the firm decides or by the company. It's not like that. Now it is important, and it is by the Companies Act. It is enacted whereby, rotation is mandatory. And so we will look into the various subsections. Okay, let's look into the various subsections quickly. Not open the book also. So, and it is where it is applicable. These are the things, small things we need to remember where it is applicable. Rotation is, of course, rotation is applicable for the listed companies and excluding one-person company and small companies. And all the bottom ones are included. See, all unlisted companies having paid up share capital greater than 10 crores, greater or equal to 10 crores, or private limited companies having paid up share capital of more than or equal to 50 crores, and companies having paid up share capital of below the threshold, that is the 50 crores or 10 crores, as the case may be. But having public borrowings from financial institutions, banks or public deposits greater or equal to 50 crores, they must rotate that rotation must take place. Okay, that rotation must take place. So keep that in mind. Keep that in mind, please. So auditor's rotation. So what happens? One second, please. An individual as auditor for more than one term, as I said, of 5 consecutive years, and is not eligible for reappointment as auditor in the same company. After the completion, it has to be rotated. So if he has completed a term of 5 years continuously, that individual auditor cannot be reappointed from the 6th year. Okay, so there has to be a cooling period of 5 years before he can be reappointed. An audit firm, here then the firm comes, 2 terms of 5 consecutive years, that's 10 years. Okay, and provided further that as on the date of the appointment, no audit firm having a common partner. These are the tricky areas that, that partner, one of the partners have come from the other audit firm, which has retired by virtue of one of these clauses. And now he is also a partner of this firm. So then also this particular audit firm is not eligible. So common partnership is also taken into consideration for the auditor's rotation. So that you must keep in mind in case of any such case study comes. That auditor A is a partner in 2 firms, and say in firm X and firm Y, and firm X have continued to audit for 10 years, and so they are no more qualified for a reappointment. Now the company has come to the audit Y. Will they be auditor Y? So and where this particular auditor is a partner, whether that audit firm Y will be eligible, that firm will not be eligible for audit. Okay, so who's having a common partner or partners to the other audit firm whose tenure has expired in company immediately preceding financial year shall be appointed as a auditor of the same company for 5 years. So he cannot be, no audit firm. So remember, it is a passive way of writing. No audit firm can be appointed. Okay, if they have common audit firm or partners who is also a partner in the other audit firm, which audit firm is no more eligible for reappointment. So the other audit firm will also not be eligible. Okay, so this is taken into consideration together. Provisions of section 139 subsection 3 talks about members of a company may resolve that in the audit firm appointed by it, the auditing partner and his team shall be rotated in such intervals. This is the power of the company. Even after giving an audit to a eligible company whose audit firm who's continuing, the company might also say that the same auditor, partner or the team shall not be rotated. Okay, shall not be continued. Shall be rotated. I'll give you an example. In case of an audit firm, it's 10 years. Does it mean that for 10 years, same partner and the same audit team would continue to do the audit of that company? That's what we are talking about here in subsection 3. That the company has the power, to say that you please rotate the partner and the audit team. Okay? So, because, as that's also important. That's all. Independence goes that, you know too much. You remember we had been discussing in code of ethics. If we know too much of that, that's also important in, problem that we tend to tend to become complacent that there is no, risk in that. So let's not look into that area. But probably that year the risk would be coming from that operations only, and we overlook it by being complacent because there was no risk in the earlier years. So I'm just giving an example. There could be many examples for such problems. Why such rotation is important. Okay, so keep that in mind. Okay, fine. So the audit shall be conducted by more than one auditor, joint audit. Okay, that it will be a joint audit that can be decided by the company, depending upon the volume and the business and how big that company is. Generally, you have seen the large business, large corporates, the banks, large government companies. They always have joint auditors, branch auditors, then joint auditors, and things like that. Separate branch auditor can also be there. Provisions for subsection 4, the central government by rule may prescribe the manner in which the company shall rotate their auditors. Okay. We need to, I'm just putting it up, may not go through it, we may not have to go through it right now, just to remind you that we must also read with the Audit and Auditors Rule in the Companies Act. So not only the sections, but we need to also read the relevant rules in the Audit and Auditors Rule. Okay, I mean the latest one, not 2014 amended. It is amended many a time. So as amended. So okay, the rotation takes place this way. How the rotation takes place, that the audit committee can recommend. Audit committee plays a big role. We will look later on that, where audit committee is important. Listed companies would have audit committee, and there are certain other factors also. Now, wherever there is an audit committee, that committee can recommend to the board. They can recommend to the board, individual auditor or firm, to replace the expiring audit firm. And where a company expiring here means that the expiry of their tenure to do the audit, not otherwise. Where a company is required to constitute an audit committee, the board shall consider the recommendation, and they can recommend. They just can listen to the recommendation. It is not important that they have to listen, and the board shall itself consider the matter for rotation. Okay. For the purpose of the rotation, some more in case an auditor, whether an individual. So this is just a repetition of what I said, 5 years and 2 term of 5 years in case it is an audit firm, which I'm sure you're all aware of. And this I'm sure you are all aware of. These started when Companies Act 2013 came in. That what will happen? What will happen? Would you start rotating immediately? No, it didn't happen like that. Some grace period of 3 years were provided. A grace period of 3 years are provided. So that way you can see. So now we have 2020. This thing has all cleared out. So this is just for your exam purpose. I don't think such a case study with such an old date will come. Just for your information, which I'm sure you were aware of. I'm not going into the details. So you can see where initially when it was enacted in 2013 and the rule to these things came up. So what happened to those audit firms which had already been doing the audit for 10 years? They got a grace period of 3 years. So in those cases, they actually did the audit for 13 years before the mandatory rotation started. Okay. So those kind of things one had to keep in mind. But I'm sure such questions will not come. So it doesn't require much discussion. All right. Casual vacancy, how a casual vacancy can happen. So subsection 8 talks about that. In case of a company other than a company whose accounts are subject to audit by the CAG, be filed by the board of directors. Okay, within 30 days. In case there are many ways a casual vacancy can happen. The auditor may choose not to audit if he comes into, if he thinks it is not correct, they are not getting the rights and duties are obstructed, which we will learn later on. obstruction to the duties and the powers that the auditor has. They're getting some obstruction there. So, I mean, there can be many reasons why a auditor can resign. A casual vacancy can happen. He may be removed for disqualification also. So, in case it is not a under CAG audit, it can be the casual vacancy can be filled up by the board of directors within 30 days. And if it is due to the resignation of an auditor, such appointment shall also be approved by the company at a AGM, at a general meeting, not AGM, sorry, at a general meeting, extraordinary general meeting convened within 3 months of the recommendation of the board, and he shall hold the office till the conclusion. Somebody has resigned. As I said, I gave you so many examples in the past days. In a bank or in a company. In companies, it happens nowadays. If you see, not so often you see in banks, but in many companies where a single auditor is auditing, it comes to paper. It comes to the media that the auditor has resigned. Why he has resigned? He has reason to resign because probably he is not getting information. So, in case he doesn't get information to satisfy his, the audit procedures as per the law, I mean, he cannot give a view of the about the statements of affairs or on the financial statements and affairs of the company. So he chose to resign. So, and in such a case, it has to be notified to the central government by the company. It has to be ratified, within 3 months from the resignation at a general meeting, and that auditor would hold the office till the conclusion of the next annual general meeting. Some more, in case the company whose accounts are subject to audit by an CAG, it is a government company, and for some reason or other, the vacancy has been created because probably he has, the auditor could have become disqualified during the course of audit for several reasons. CAG would be CAG is empowered to appoint an auditor within 30 days. And in case the CAG doesn't fill up, board of directors has to fill up within the next 30 days. So, we have to keep this in mind for exam purpose. Some other provisions. Subject to the provisions of subsection 1, which talks about the appointment, subsequent appointment. A retiring auditor may be reappointed, he may be reappointed as a auditor if he is not disqualified for reappointment, that we will learn in 141. He has not given the company a notice in writing of his inability or unwillingness to be reappointed. I don't want to continue as an auditor with you, right? Our special resolution has not been passed, that meeting appointing some other auditor or providing expressly that he shall not be reappointed. Okay, so an auditor is eligible for reappointment. Okay, subject to these clauses. Where at any annual general meeting, no auditor has been appointed or reappointed, the existing auditor will continue to be the auditor of the company. Okay, and as you said, not ratification is not important. I'll check that and I'll come back. And 139.11 talks about where a company is required to constitute an audit committee. Audit committee, all appointments, including the filling the casual vacancy, shall consider the recommendations of the audit committee, as we have seen in case of the reappointment also, that they have it is their within their purview, or it is their within their responsibility to recommend an auditor, but which will be heard by the board of directors or as the case may be. Okay, so that's 139. Okay, that's section 139, and then we will be just quickly discussing about the removal, resignation of auditor under section 140 of the Companies Act. So, as per the section subsection 1, the auditor appointed under the section 139 can be removed from his office before the expiry of his tenure only by a special resolution, after obtaining the previous approval of the central government in that behalf, as per the Audit and Auditors Rule 2014 as amended from time to time. Okay, so there are certain very strict procedures in place where which has to be followed before auditor can be removed from his office during his tenure. Okay, not during the reappointment. He may not be reappointed, but this is being removal or before the expiry of the tenure. That's the key. The application, it has to be, how it is to be notified to the central government by filling up the form and the fees. The application shall be made to the central government within 30 days. The company shall hold general meeting within 60 days of receipt of the approval from the central government to pass the special resolution. Okay, so the board decided they want to remove the auditor for whatever ground, and then they notify it to the central government filling the form along with the fees within 30 days. If the central government approves that, if they approve it, then that, that resolution that they have taken to remove the auditor during the from his office during the tenure has to be passed in the general meeting, which has to be convened within 60 days after they receive the approval from the central government. Auditor's responsibility. So what are the responsibility in case an auditor resigns? Okay, on resignation. This is on resignation. That is the removal. Keep that in mind for exam purpose. So it is important for the the company to notify if the company removes. Okay, and here we are talking about the responsibility of the auditors in case he resigns, the firm or he resigns. Auditor shall file within a period of 30 days from the date of resignation a statement in the prescribed form with the company and the register. Okay. In case of companies referred to in subsection 5 of, that is the government company under 139(5), the auditor shall also file such statement with the CAG, okay, indicating the reasons and other facts as may be relevant for the case, as may be relevant for the reason for resignation. So whether he is resigning from a government company or a non-government company, this is what he has to do. And for this one, please remember that auditor is given a chance to make a representation. Remember, we had been talking about making a representation in Code of Ethics, that it should be within, a reasonable length of his statement. He should be given he is generally given a opportunity to represent his case. All right. So if the auditor doesn't comply with subsection 2, which is that what is his responsibility, that he doesn't notify the central government or the CAG, as the case may be, the firm or the auditor is punishable with a fine which will not be less than 50,000 and may extend up to rupees 5 lakhs. Okay. So that's what. If you have any question, I'll take that. If not, we will move forward. Okay, no question. Just one minute. Okay, so subsection 4, appointment of other than the retiring auditor. So if it is not the retiring continuing auditor who was there till the conclusion of the AGM, the appointment of a new auditor, basically, that's what is meaning, other than the retiring auditor. Special notice is required to be given, for a resolution to be passed in the AGM. For appointing an auditor other than the retiring auditor, a notice must be given to the members, except where the retiring auditor has completed. If he has completed a consecutive 5 years or 10 years, as the case may be, then it automatically becomes a rotation. So, special notice is not required, to be given to the members to be taken up in the AGM. But if it is other than so, it is decided that, say, for example, it's an individual who is continued to do the audit for 3 years, so he still can be reappointed for 2 more years. But for some reason or other, the company decides not to reappoint that particular auditor in the AGM, they didn't remove that auditor during the course of the time, during his tenure in the office, but during conclusion, where he has to be reappointed at that point of time, the company decided, that we will not reappoint him, though he has not completed the tenure of 5 consecutive years. In such case, only a special resolution is required. A notice is required. A special notice is given to the, not a resolution, sorry. A notice has to be given to the member, all right, to be taken up in the AGM. So, for the normal rotation of 5 years or 10 years, it is not really required. Keep that in mind in case the case study comes, okay. On receipt of such a notice for resolution, the company shall forthwith send a copy to the retiring auditor also, okay. So, company should also forward the notice to the auditor. That is important, that he should be notified that you are not going to be reappointed, and he should be, again, he can be given the chance to present himself, where a notice is given for such a resolution and the retiring auditor makes with respect a representation in writing to the company not exceeding a reasonable length. He has the power to do so. Under 144, the notification should include the fact, the representation having been made, and they send a copy of representation to this is the auditor is doing. Section 144 is talking about the auditor, that in the notification, and where the representation has been made, that representation can be shared with the member, member of the company, the shareholders basically we are talking about, okay. So this is, we don't have to, you remember during Code of Ethics we said that members are not supposed to send, members should not be ideally sending such representation. The representation should be given to the company. It is the company's responsibility to send it to the every member of the company whom the notice for the AGM has been sent. Okay, so that's important to keep in mind. Company tribunal in case an auditor acted in a fraudulent manner. Very, very serious thing. By order, company tribunal, by order, direct the company to change the auditors. If it has come to notice by whatever reason, somebody has complained, whatever reason, it has come to the notice of the, tribunal, and he has been it has been investigated and identified that, well, he's not correct, not done the job correctly. So the auditor, he can direct the tribunal can direct the company to change its auditors. And it has to be done, and it shall within 15 days of receipt of the application makes an order that the auditor shall not function as an auditor, and the central government may appoint another auditor in his place. Okay, and it may be noted that an auditor, whether individual or firm, against whom final order has been passed by the tribunal under this section shall not be eligible for reappointment as an auditor for the company for a period of 5 years from the date of passing such order, and the auditor will also be liable for punishment under section 447, which talks about fraud. You remember? We will be again discussing that. So, if it is identified, if it is found out, based on such an application made to the central government, that auditor has not done some job correctly, or within his purview, or has done something fraudulent, and it has been, they have enough evidence for that, the tribunal, so they can direct the company to change the auditor and also notify. And the auditor will be responsible for such penal action under section 447, and he cannot be reappointed for a further period of time, and it can go at length. If he is convicted, suppose it goes to such a level where a auditor is convicted, under other misconduct, he won't be, and he is probably is jailed or something. Until that period of punishment is over, he cannot be reappointed. So all these are taken care of here. Okay, so keep that in mind. The tribunal has to satisfy itself. Application is made to the application is made, based on the application, naturally the tribunal will not decide. So it has to complete his own, work, and has to be satisfied. Then only it will not, pass an order like that to change the auditor. Okay. And here, please remember that in case of an audit firm, each and every partner will be jointly and severally liable. And in case of a proprietorship, of course, the auditor is responsible. So for any purpose, for any matter, for your exam purpose, please keep this in mind as an explanation, that if you are talking of a audit firm, the penalty cannot be on the audit firm. Audit firm is, a constitution. The constitution is that it's an audit firm which is basically with a combination with many partners. So partners are actually whom we are going to penalize. You cannot penalize the firm. Well, firm can pay the, make the payment, the penalty in terms of value. But when it comes to imprisonment, whom would you imprison? You cannot imprison a firm. So it is the partner, all the partners, all the partners who are jointly and severally, they are responsible. Keep this in mind, not to confuse you. It is blanket. It is blanket in case of such punishment. Okay. Any question? No question. I'm sure you are all aware of this. Very good. Correct. Yes, very true. Then let's move to the eligibility qualifications and disqualifications under section 141. And so what it talks about, 141 talks about the qualification and disqualifications of a firm of auditors, be it firm or individual. A person shall be eligible for appointment as an auditor of a company only if he is a chartered accountant. Very basic thing, that he has to be a chartered accountant. Otherwise, one cannot do an audit. Okay. And section 141, subsection 2 talks about where a firm including a limited liability partnership is appointed as an auditor of a company, only partners who are chartered accountants shall be authorized to act or sign on behalf of the firm. Now, there are other conditions also here, like company, the cost auditor can do audit, the CSS can do audit. So one has to keep that in mind. But fundamentally, the qualification, disqualifications, eligibility of an auditor of a company is essentially, it can be done by an auditor, individual auditor, it can be done by a firm, it can be done by a limited liability partnership, also LLC, LLP, but the partners can only, partners who are chartered accountants shall be authorized to act and sign on behalf of the firm. So, 141.3 and Rule 10 of the CAR, that is the company's Audit and Auditors Rule 2014, talks about a body corporate other than a limited liability partnership registered under liability. These are the disqualifications, other than an LLP. If it is done by some body corporate, no, it is not allowed. An officer or employee of the company cannot be an auditor. This we have discussed at length. I don't think we need to discuss it further. A person who is a partner or who is in employment of an officer or employee of the company cannot be both. He is also an employee and he is also a partner, part-timer. No, he cannot do the audit. Some more disqualifications. Person who, relative, a person who, himself or his relative or any of the partners holding security of interest in the company or its subsidiaries. I think we have discussed it at length and from time to time. A person, an individual auditor or a firm who, whether directly or indirectly, has business relationship with the company, okay, and its subsidiary or its holding or associate company or subsidiary of such holding company or associate of such company cannot be a auditor. Okay, maybe we will have some question answers, case studies here to make it simple. A person whose relative is a director. Whose relative is a director, and you know the meaning of the relative: spouse, parents, children, and or is in the employment of the company as a director or key managerial, is holding a key managerial position. That person cannot be an auditor. All right. So this we have discussed during our Code of Ethics class, which is complementing with the Companies Act also. 141(3), subsection 3, full-time employment. He is in full-time employment elsewhere, or a person or a partner of a firm holding appointment at its auditor, if such person or partner is at the date of such appointment or reappointment holding, an audit for more than 20, 20 companies, having a paid-up share capital of not less than 100 crore. A person individually. So I'm sure you are aware of this, that one auditor, if he is auditing 20 companies where the paid-up share capital is not less than 100, there he's disqualified for getting further audit in similar companies. Okay. If it is an audit firm, this calculation has to be taken into consideration individually. All right. So if there are 10 partners, 10 into 20, okay, that many audit can be taken up individually. Now, if one of the partners is partner in 2 firms, so both the firms taken together, these 20 will apply to both the firms, not individually. That in firm A, he can have 20 audits, in firm B, he can have another 20 audits. No, it has to be 20 audits across A and B, maximum. Okay. As I said in the previous slide, that if a person who is convicted by a court, and which could be under other misconduct or the professional misconduct involving a fraud and a period of 10 years has not elapsed from the date of such conviction, if it is related to the fraud, which is a professional misconduct, and he has been convicted in a court of law, whatever court of law it may be, and 10 years have not elapsed from the date of such conviction, that person cannot be appointed as an auditor. Any person whose subsidiary or associate, company or any other form of entity is engaged as on the date of appointment in consulting and special other services, as we will see given out in section 144. What are the other things that we cannot do? Services which we as an auditor we can do and we cannot do. If he is doing such service, he is disqualified to do such job. Remember, we had been talking about, other services, consulting services, where the value is more than, the audit. He cannot do the audit in that case. If he is also doing an accounting job, he's also maintaining the books of accounts, he cannot take up the audit of that firm. And there are certain things which he can do simultaneously. Okay, he is doing a systems audit, he is also doing a audit, yes, that is allowed. But if he is designing and developing a system, he cannot do an audit. Okay, there are a whole lot of things. So that is given out in the services that cannot be offered by an auditor by section 144 of Companies Act. Okay, these are some of the disqualifications. Okay. Business relationship means what kind of business relationship he can have, why he can become a disqualified. He has a family business also. The auditor has a family business also, and that family business is having a relation with the business relationship with the company where he is an auditor. Okay, or he's proposing to be an auditor. There he cannot really be a auditor. And the Code of Ethics tells how to deal with such audit. You remember that he should not be part of that team. Okay, and if he's a single auditor, he cannot do it. If it's a firm, the Code of Ethics tells us a whole lot of things how you can manage that situation. That you do not use that partner at all for that audited, or if we cannot mitigate that risk, we do not take up the job. This we discussed. So can you, my dear students, now you should be able to relate, the Companies Act's qualifications, disqualifications with the Code of Ethics. That's important. And if you read it this way, while you are reading, if you quickly go to the Code of Ethics chapter, this is the easy way of remembering. And the moment you remember, not blindly mugging, if you read it this way logically and then immediately write it down, I can guarantee you will not forget this. This will actually, your not only your fundamentals will get correct, but it will actually become it will be solidified, and naturally you will remember. So you have to link it together and then immediately go to that chapter, and see what the Code of Ethics is talking about, in relation to such disqualifications, how we can manage. So in both the cases, based on what question comes, you can really answer it. Of course, keep it yourself to the extent institute expects you to answer. Don't write more. I'm not saying that you have to be to the point. To the point is always the key. I'm sure you by now, I don't have to tell you that. The point is the key. That you don't talk extra, you don't write extra, and you don't write less also. So that you have to judge. Okay? Disqualifications under section 141(4), subsection 4. Where a person appointed as an auditor of a company incurs any of the disqualifications as we discussed in the earlier subsection after his appointment, not during the appointment, it is not necessarily during the appointment. If he was not disqualified when he got the job, but during the tenure, he is guilty of any such, I wouldn't say the misconduct. If he is disqualified under any of such parameters, he has to vacate an office. He has to, suddenly his business, say his personal business or his family business is getting into a business partnership with the company where he is the signing partner. This is happening during the tenure of his office as an auditor. In such a case, he cannot do the audit. He has to come out. He has to come out and, tell that, my family business is going to have a business partnership with the company. So I am disqualified and hence I cannot do the audit. Somebody else would do. And if it is a single, partner, so proprietorship firm, he has to give up that, audit, or he delays the business association, whatever it is. Okay, whatever it is. Suppose he's when he was doing the audit, no such disqualification was there, but during the tenure, his or her spouse joined as in a key managerial position in that company. He immediately becomes disqualified, and so that risk has to be mitigated. That risk has to be mitigated by the way it has been defined in the Code of Ethics. Otherwise, it will be not only you are not complying with the provisions of Companies Act and hence punishable, but you are also guilty of misconduct under the under the Chartered Accountants Act also. All right, so we need to keep that in mind. So, keeping that into consideration, we should be approaching a question. For the time being, it's your exam is more important. And as a practicing chartered accountant, we generally approach it this way. Okay. So he has to vacate his office as an auditor, and such vacation shall be deemed to be a casual vacancy, which will be filled up by the way we said, 139 subsection 8 talks about the casual vacancy, and it has to be filled up accordingly. Okay. The way it is defined in the Companies Act. So, remember, casual vacancy may not only happen because of some fraud or something. It could be because of one of such disqualification which happened. And the auditor came to know of it, and immediately he gave up. He resigns. The audit committee. A little bit about the audit committee we will be talking about. Which is generally, if you have any question, do let me know, huh? Posting any question or not? Okay, there is a question. Before expiry of the term, removal of auditor first step is spatial resolution and spatial application. Okay, which one comes first? All right. Another Sivagami said, if an auditor acted fraud, then as per section 145 can't act for 5 years. As per section 141.3 can't be appointed for 10 years. It will be 10 years. It will be 10 years if, okay, you are saying that his conviction, that if he is convicted, so if the conviction has not elapsed for 10 years, he cannot be appointed. Now, also you are saying whether additionally another 5 years of the cooling period will also come. Okay, I'll come to this. Come back. Immediately I will not answer this. I will read this properly and then I will come back to you. Okay. I do not want to give you a wrong answer. Yes, this is a very tricky thing you have asked. 10 years, so definitely. Now, whether 10 years includes 5 years or additional 5 years will be considered. I'll come back to that. Okay. And another Subramaniam is saying expiry of the term removal. No, it is after he gets the approval. Now, after he gets the approval, it has to be passed. It has to be passed in the general meeting. So, getting the approval is important. You just cannot like that remove an auditor. So now again, time is important. How much time they are going to wait. So it is sent to the government first. Approval is sought first, and then the resolution is passed in the general meeting. That step is there, but the timing here is important, that how long they are going to wait for. Okay. Otherwise, there will be a, there will be like the auditor will not be allowed to work. Okay. But what will happen to the audit? That's a question. Another is, can the partner of the retiring firm can join as employee of the new firm? He can join as the employee of the new firm which has been appointed, but he cannot be part of the audit team. He cannot be part of that audit team. No, he cannot. Okay, he cannot be part of that audit team. Code of conduct talks about that he should not be part of the audit team. But Shivgami's one, I'll come back. I will not answer you immediately. I will check and then come. Okay. Now coming back to the questions. Coming back to the audit committee. Coming back to the audit committee. Talks about 177 of the Companies Act 2013 talks about the audit committee. So all listed companies would have the audit committee. Okay. So that's what that way the bank would also have the audit committee. The commercial, the scheduled banks who are listed. The listed banks would have an audit committee. So that's why I didn't discuss audit committee separately. So it's guided by the Companies Act. The requirement is guided by the Companies Act requirement, and hence even the PSU commercial banks or the commercial any scheduled banks who are listed would require a audit committee. All public companies and all the roles and responsibilities and the powers of an audit committee will remain. They will not also change, like changing an auditor in a bank audit. There also it will be like, they can always recommend. But that much, they can recommend. All public companies with a paid-up share capital of 10 crores and more should have all public companies having turnover of 100 crores rupees or more, and all public companies having in aggregate outstanding loans or borrowings or debentures or deposits exceeding 50 crores. Debenture, so not to forget the debenture part of it, it is also a borrowing repayable, and deposits that is to be repaid. And so having such kind of an outstanding would require an audit committee, and audit committee generally shall consist a minimum of 3 directors with independent director forming a majority. Okay, and they generally report to the board of directors. They also need to report, so they report to the board of directors. They are quite independent in that nature. So just a comparison. I have taken the roles and responsibilities taken up from the study material only. A company which is required to constitute an audit committee under section 177. Here the competent authority is basically the audit committee, and categories of companies which are not required to constitute an audit committee under 177, who would take certain decisions about these various things like proceedings and all. It will be the board of directors. Authority like of the auditors, of appointment of auditors, and here we are talking about the appointment, reappointment, qualification, looking into the qualifications, disqualifications of the auditors, that the competent authority should look into the qualification and experience of the individual auditors proposed to be considered for appointment as auditor, and whether it commensurates with the size and requirement of the company, right? So please remember, even in case where an audit committee is there, the ultimate decision is the board of directors. The audit committee can only recommend, and where it is not required to have an audit committee, it is done by the board of directors, and it shall have regard to any other or pending proceeding against a professional misconduct which is undergoing, probably guilty of misconduct under the Chartered Accountants Act, or any other competent authority by any court in that matter, any court case. Okay. So please remember, audit committee can recommend and board can consider and recommend, which has to be ultimately decided at the AGM. Private company, well, only, it's completely different, but it has to be, in paper, it must be by the AGM. So auditor appointment is essentially by the members. That resolution is passed, a notice is given. And so in case, a majority having substantial holding in the shareholding or voting powers, if such member or members defend that an auditor cannot be appointed or reappointed, a board cannot do anything. All right. So that has to be taken into consideration, that the ultimate power actually lies with the members of the company, and is generally this resolution is passed in the board meeting. Okay. Powers and rights of auditors. Quite serious thing. Okay. So what are the various powers and rights of an auditor? We'll look into this. Before that, let me give me 2 minutes or some time to see if I have missed out anything of importance. What I understand, these are the things you were already aware of. So we didn't go into it in detail. Still, if you need to something, like one of you asked me a question, I'll definitely get back to you. If you have any such question, you can ask. Post it at least. I have told you about the ceiling. Yes, ceiling, the number of audits, number of audit removal. If I have missed out on anything, I don't think I missed out, but if anything needs any specific clarification, do post it. I'll definitely answer. Okay. Okay. So, Section 143, subsection 143 of Companies Act talks about the rights and powers. It's quite a big section, 15 subclauses. Okay, so we'll spend some time on this. There are 15 subclauses. Just a summary for quick executive summary or a summary of what are the various clauses. Then we will discuss one by one. Section 143, subsection 1 gives the right to the auditors to have access to the books of accounts, to various books and records for our inquiry purpose. Unless and until we can access the books and records, we can't do our work. And without an examination, if we are doing an audit, we are guilty of misconduct. Alright. So you see what I am reiterating again and again, that you see this is very much connected with the code of ethics, because this is talking, at least today's class, this is talking about the powers, the eligibility, how we are appointed, how we do the basic work, and they are connected with the code of ethics also. So 143.1 talks about the having access to the books and records. 143.2, subsection 3, subsection 4. Subsection 2, subsection 3, subsection 4 of section 143 talks about reporting to the members, how we will report to the members, what are the content of the reports, and what is the, including qualification, modification in the report, like qualifications, emphasis, and things like that. That it is our responsibility. And there are several guidelines. There are several guidelines provided by the Institute, especially on the frauds and things like that, on reporting. Students should be at least glancing through those, guidelines. They might seem to be very, very voluminous, but it would be good for you, especially in the areas of fraud, as we will see. In case of the fraud related areas, you must go through the guidance note published by the institutes, available online, because of the case studies, because of the case study purpose, because the intricacy of the case studies you may not be able to identify if you do not go through the institute's guidance notes also. I will give you, depending upon the time that we get during the class, I will try to give one or two case studies specifically based on the fraud. Okay. So 143, so subsection 2, 3 and 4 talks about the reports to the members, stakeholders, contents and qualifications. And subsection 5 of 143 talks about the powers of CAG. And subsection 6 talks about supplementary powers of CAG. 143.7 talks about test audit that is generally can be conducted by CAG. 143 subsection 8 talks about the branch audit. 143 subsection 9 talks about compliance with auditing standards. So it's enacted. We don't have a choice but to follow the auditing standards. So the auditing standards, accounting standards are all today enacted in the court, in the Companies Act. So it is absolutely, by act, it is now mandatory on the auditors to follow the auditing standards. So, now we cannot say that we do not know. Subsection 1 of subsection 10 of section 143 talks about the compliance with the government auditing standards. Government has a lot of auditing standards we generally follow the, auditing standards pronounced by ICAI, but they can have their own auditing standards because they do not always follow accrual basis of, accounting. They still follow cash method. Though internationally, globally, all government companies are moving towards accrual basis, but in our country, it's still government accounting is on cash basis. So they have, so all auditing standards relating to the accruals and all do not apply, and naturally they might have their own standards which we need to follow if an auditor is doing a audit in a government company. Subsection 11 talks about specific report that may be required by government or NAFRA. We will look into that. It's basically, NAFRA is basically a regulatory authority which came into being a couple of years back, and they are kind of a monitoring authority, which is on the auditors. Monitoring authority on the auditors, which is, and this body is not only is not constituted only of chartered accountants, but others, members from other bodies also. So an auditor has to be very careful that we are under scanner not only by the institute, but also by other competent bodies, and any non-compliance can give rise to the case or situation being referred to NAFRA, and we might be penalized. So is a regulatory authority for auditing, accounting and financial reporting, to advise on matters relating to auditing standards in addition to accounting standards, and also act as a regulatory body for accountancy profession. Okay, that's very serious, that they are basically, sniffing around, and on the professional accountants to see whether the work is being done as per the as expected from the chartered accountants in practice, as governed by various laws and rules and regulations. And section 143 subsection 12 talks about the fraud reporting. Very, very serious thing, that there are various, parameters, conditions under which we need to report, which we discussed during Code of Ethics. If you remember the timing of reporting of fraud, we will revisit this again, that this is not only by the Chartered Accountants Act, but it is also now enacted through Companies Act. So it becomes absolutely mandatory that we will the professional should be vigilant, very vigilant in our work. And questions for the students, you may expect questions from this area. So fraud reporting, the 13, 14, 15 I'll discuss as I go, but I'll come back to this fraud reporting later. 12 talks about, because we will be discussing each of the subclauses in detail. So 143.12 talks about the fraud reporting related to any audit. 143 subsection 13 talks about where, in case of a fraud, a professional will not be held responsible or guilty of professional misconduct. Okay, that we must be careful. So we have been given some respite. We have been given some respite that of not being guilty of professional misconduct if we do not report fraud. And section 143 subsection talks about that. Okay. So what are those we will be discussing? Because we must remember that we will, in case of fraud, we will be disclosing, and disclosure is also, coming under Code of Ethics, that we cannot disclose whole lot of things about the company where we are the auditor. So, but in case of a fraud reporting, we need to disclose. So that way, that code of conduct, we will not be constituted as guilty of misconduct. So whole lot of things are there. We'll discuss this. And 14 talks about the cost audit and the secretarial audit, which has been introduced a couple of years back. And 15 subsection 15 talks about the non-compliance. That what happens, that's why probably it is kept at the end, that what happens if the practicing chartered accountant or the audit firm is not in compliance with all the provisions that is there. So what kind of penalty is there, that is being discussed for non-compliance, and that includes the company secretary and the cost auditor also. The cost auditor as well as the company secretary audit also. We'll discuss that. Okay, so let's go back to 1. So let's go back to 1. And so it talks about, because I didn't want to clutter the screen with the, the data which is there in your study material or in the Companies Act sections in the MCA site. I mean, you can read very well. So explanations are important. So 143 subsection 1 of section 143.1 talks about that right to access to books and accounts, okay, etc. So what it says that we should be given at all times. Please remember, these are the catchwords for your exam purpose. This is the catchword for your exam purpose, to catch, so that you can catch this and answer the questions accordingly. And you must mention if it is because it's only 30-70, 30% is your MCQ, rest is descriptive. Descriptive is quite huge. So you need to write these, words. It will carry better marks. At all times, shall have the right to access the books of accounts and vouchers of the company, whether kept at the registered office of the company or at any other place. And so any other place. They might say that, these vouchers we kept in, I will keep on now explaining what does it mean. In other place means what? Let me ask you also. What do you mean by in other place? What do you mean by other place? It could be in some other location in branch office. It could be, today I'm sure you are aware that many companies do not have that much of space to keep in store. Storage space is not there enough to keep the hard copy documents. If we have not come to a stage where everything is digitized, okay, we are slowly moving to that. But as we stand today, as we speak today, everything is not digitized. It is not paperless. We generate lots of papers. Now, where to keep those papers? Legally, we need to keep those papers, isn't it? We need to store those papers. Now, where do we store those papers? We don't have space. Just think of, spaces like Bombay and all, Mumbai and all. Where is so much of space today? And why should one company spend so much on an office, rent or lease or anything in that matter? So just because they need to store documents. So what they do, they keep these documents with some third-party agents who will maintain the documents on their behalf. They will maintain the documents on their behalf. There is a written contract, agreed contract with them for, for confidentiality, that they are maintained in good condition, because, paper documents, they will have their normal wear and tear over a period of time. So those are given in the contract. Those are completely air conditioned, offices at, temperature controlled, normal, humidity control, the dust free, all those are taken care of, so that the longevity of the documents are maintained as per the legal requirements. Some may be, as you are aware, that minimum 8 years documents have to be kept. But why only 8 years? If some cases are sub judice, the documents have to be kept forever till the case is over, and some settlement. So that those papers need to continue to be kept in good condition, so that they can be produced in the court, so it doesn't necessarily for 8 years. It can be much more than 8 years. So who's going to maintain that? You need to, if you just think of a company doing so, they need not only space, they need that environment, they need people. So people are trying to, these are non-core areas. These are non-core operations. That's not the core business of a company, but these are essential. Can't do away with it. So these are generally outsourced. Outsourcing is so, is a big thing today, that people who are, expert in these, this is a service they are providing. Let's take benefit of that. Chartered accountant, big chartered accountant firms can do that. Where to keep our, documents? Just imagine last 6 months office is closed. It is being, the termites will come, forget about the other insects. But if it is kept with, these third parties, these things are kept, are taken care of, because by contract this is supposed to be. So that's what I maintain. I'm talking about one of the examples that they are maintained in other, places. Now, as an auditor during the audit, if you need certain voucher, you need some voucher relating to, say, April 2019, and the client says that no sir, no madam, we cannot give you the document because it is with the third party. What the auditor will do? You will insist that you have to get that document in, as quickly as possible, and that is also in the contract. That is also in the contract with the third party, and they charge separately. If you are not aware of, they charge separately for getting the documents from there and produce it to you. And these includes digital document also. Today, these documents are not kept with the organization, again because of the cost. This is our core business. Why should they bother? They would give in the cloud. You yourself do that. Clouds available. I'm not talking of free clouds based storage where it is paid. Amazon Web Services, So there you can keep. Google, they have. So all large IT organizations. So we are talking about that kind of access to data also when we are talking of section 143 subsection 1. Keep that in mind, please. As may be required, as may be necessary for the performance of as a duty of the auditor. That's why I said in one of the classes, in my previous classes, that whenever we start audit, at the time of during audit planning, we prepare what are the data we need. What are the data we need? Because you have to give time to the auditee also to arrange for the documents, right? So they have to get the data. So we give them a list of the data that is required, including the period, that these are the data for this period we need, and you please make it available during so and so time our audit. But it is absolutely important that we must get an access to the data. Okay. So right to access is not limited to the books and records maintained at the registered office. So if the company has branches, so it has to be, so auditor can get access to that also, through the branch auditor or from the branch, or he can rely on the branch audit as we will discuss under subsection 8 of this particular section. So whatever way, auditor has to satisfy himself. He cannot later on give in his report under subsection 2, 3 and 4 that this is subject, the statement, financial statement gives a true and fair view of the company state of affairs, subject to the fact that we could not verify the documents because they were not made available. That would not be considered. That cannot be the content of the report. Alright. So if you are not satisfied, give an opinion. That I cannot give an opinion because I could not review I could not get access to the books and records. But you cannot give a report like that everything, is true and fair, subject to the fact that we didn't get access. No, it's a fallacy. That way you cannot save the skin. So be careful about the content of the case study. Alright. Further, the auditor of the company, which is a holding company, shall also have right to access to the records of the subsidiaries or associates if it is related party transactions, the documents which you are reviewing. You are not happy, so you might call for such documents from those subsidiaries or associates if you feel like, or you can depend on the auditors of that subsidiary or associate companies. It is completely the depends on the auditor, how he wants to satisfy himself. But as per section 143 subsection 1, the point is that auditors should get free access to, these information. They cannot say that, no, you don't have the right. This is within our right and power. So with that power and the right comes the accountability and the responsibility. So you must keep that in mind. You cannot later on say that it was not my responsibility. No, it is. Okay. Like say minutes book. Minutes book are, they will say in a private company. It's a private limited company. The client may say that why you need to go through the, minutes book, or even it's a limited company. Board meeting, it is very confidential in nature. It is confidential in nature. We won't give it to the auditor. But no, it has to be. Why? Can you tell me? Can please post an answer to my question? Why it is important for an auditor, whatever company, limited, private limited, listed, government, whatever, where he is doing an audit and it's a company, that the minutes, board minutes, he needs to review. Why? And he can take excerpt from there, keep a copy of that. He cannot, he can take a copy of that, whatever relevant areas, paragraphs he wishes to. And auditee cannot deny us that. Why it is important to review the minutes of the meetings. Not necessarily only board of directors. Any other, minutes of other committees and boards. But board minutes, yes, it is absolutely necessary. Why is it so? I need an answer. This will open up a whole lot of things if you are not aware of. Please post an answer, whatever you know. Please. I request you to put up, post an answer. GoDaddy, yes, Ranjit, yes. GoDaddy is used a lot in our country, true. Somya, I don't know. I'm sorry, I don't know why you still can't see the screen. I think the screen is fine, but I really don't know why you are unable to see. I'm so sorry. I'm still visible, Jay. Can you post an answer? Those who can hear me, or you can see why it is important to check the minutes of the board meetings. Somebody wants a break, Nishant? Okay, yes, Ranjit, very good. Yes, John, very good. All major decisions major decisions are taken in the boards, and it is important to know what kind of, discussions happened. Was there any discussion at all? Or the, the managing director, chairman and managing director just didn't allow any dissent. He said it has to be done, it has to be done, he or she. Okay, so you can find out what kind of decisions and whether there has been a discussion. Why you need to know that whether there is any discussion, to know the power of the directors. They are just not simply puppets in the hand of the managing director. All right. So there is no point. So the control environment, if you remember about the OSO framework, these are the things which actually bring to light, what kind of control environment at the helm of the affairs is working. I mean, it is a democracy. It's a democracy, and we must, voice out our dissent. We don't have to agree to everything. We should have a dissent and then come to a conclusion, which is good for the company, which is not, if something is not good for the company, we must voice it out, our concern, and we should be heard. We should be given a chance. The director should be given a chance to be heard, and then the decision is taken. So these are the things an auditor can identify only if he goes through the board minutes, and these can gives an idea of what kind of transactions they are they are arranging, what kind of processes they are accepting, and gives again an alert system goes up. I'm not saying again we should be bloodhound, but we should be very skeptical. Our skepticism should always be there. We should not let our guard down at any point of time. Okay, there is no reason not to believe and not to believe completely blanket in a way. So there is no personal relationship. You see, we are independent. Auditors are independent. So that's the reason why having a relationship with any of the key managerial person, it is said that that person should not be an auditor. All right. So we are independent, and we must apply our independence, our own justification, and our prudence to see the decisions taken by the board are good. Okay, are good for the organization as a whole. Because not to forget, the auditor at all points of time, we must know that our responsibility lies with the member. All right, our report is for the members. So it is not only for the board of directors. We do not have to make them happy. We are reporting to the members, and then so many compliances are there. So one to identify what sort of things are going around, what kind of decisions are taken, what kind of business processes they are taking. Like, say for example, somebody says that the entire thing will be outsourced. So immediately, these you may note it down in your audit plan, that one has to go through that contract. One has to go through that contract with whom the company has agreed to put their data as backup, or their source data, physical data, because they are of confidential nature. How would an auditor know that they won't be disclosed fraudulently? So those are the things which we must keep in mind, and hence it has to be reviewed. A whole lot of answers are coming. Very good. Yes, Jose, this is also right. You have to relate it with a fee. Yes, correct. That's another audit process we must do. That's an expenditure, whatever small it is. Good audit procedure. Important matters. Yes. Subramaniam. Yes, very good. Excellent. Yes, Aditi Kumar, you said to check going concern. Yes, it can give rise to that also. Alert goes up. You cannot immediately take a conclusion that the company is no more a going concern. But from the discussion, your alert system should be up and working. And then you have to have conclusive evidence to make such a comment that the company is no more a going concern, right? Very good. Or only in records. Yes. Those are important also. Especially in today's, last 6 months, no physical board meetings are happening, in almost all companies. So probably it will be good to see that, one or two video clippings also, whether they were physically present. Yes, a good point by Ranjit. Not on papers. Yes. Okay. Good. So that's the board minutes. So right to explanation. So 143(1) subsection 1 talks about the right to obtain information and explanation from officers. We have the right to know. I mean, we can keep on asking, but we have to be very careful. We must put forward our questions properly. We should not disturb. There must be a balance. We have to strike a balance. You cannot go back to the general manager, forget about the board of directors, or some director that keep on asking questions. You have to be prepared. This is the questions I'm going to ask, and that's the reason I'm saying documentation is so important. We must carry pen and pencil and note it down, or at least we can copy it all. Record it also. We can have a audio recording so that we can later on note it down, because we may not always write down everything as we are listening. We tend to forget. But with permission, with due permission, you just cannot do it without the permission of such a key senior member. Otherwise, it probably will boomerang it. They will say you are doing a sting operation. Okay, so we have to take a permission. Right to get the information and explanation from the officers. All right. Right to receive notices and attend all general meetings. You have the right, as long as you're in the office during the tenure, you have to take you're supposed to get the notice and attend the general meeting. And right to report. Yes, we have the right to report to the members of the company on the accounts examined by him, that we will discuss in other subsections. Right to lien. In terms of the general principles of the law, any person, if you are, holding possession of somebody else's property on which he has worked, I mean, we can hold it with us for such whatever period. Again, Code of Conduct says that how long we can hold it before it becomes we become guilty of misconduct. So we can hold it. We can, of course, keep a copy of it, but original document we can keep up to a certain point of time. Auditor can exercise lien on books and documents placed at his possession by the client or non-payment of the fees. For the non-payment of the fees, you can hold it back, the original copy. That unless and until you pay me the fee, I will not release the documents. All right. In other cases, you can hold it for a period as defined in the Code of Ethics, but you can always keep a copy of the documents that you have examined. Okay. Institute has given documents written must belong to the client who owes the money. That's very important. All right. And you can keep a copy only if you have worked on it, not on unnecessary papers. Okay. And but we must get it. Like I was telling you that in one of my audits, I was for a certificate job, small certificate job. I needed a, certain area from the board minute, and I was not given that. I could not do that certificate. So one has to decide whether it will be done if I do not get access to the books and records. And just because they didn't allow me, I cannot sign a certificate or report, whatever it is. It will be a misconduct on the auditor's part. Keep that in mind. This kind of question will come. May come. I mean, I won't say will come, may come. It also talks about you. Okay. So, inquiries, just a minute. I want to talk some more about this. What are the things that's basically are why you need the documents? Why you would need the documents to do the audit as per the requirements, as per the standard auditing practices, auditing standards and things like that. And we have to inquire as per the act and the subsection. It says that the auditor, amongst the other matters, should also inquire into the basis of the security, should inquire into the whether loans and advances made by the company on the basis of the security actually have been properly secured, and whether the terms on which they have been made are prejudicial to the interest of the company or its members. So it is talking about the loans and advances given by the company based on securities which they are saying whether actually they have got such securities, and the loans and advances given by the company is good for the company or not, and whether transactions of the company which are represented merely by book entries are prejudicial to the interest of the company. Very important. Book entries are important, some adjustment entries, but all transactions pertaining to the company is adjustment entries. Shell companies, you're aware of these. This is the way the money laundering happens. So this is the reason why you need to review the vouchers and the records. Okay, I'm sure you can relate it. And case study will come like that. It will give you a situation, and we'll ask you to identify. That's expected from the final year student, right? So you see, this is what we are talking about, that there is a scenario where it gives a skepticism or a doubt in the mind of an auditor that this is a money laundering activity is going on. So in such case, if it is, now when a money laundering is happening, it is happening through some associates or through associates. So if you can come across the details of such associates, we have to get into the skin of that, get into the detail of that, right? So we need to look into the transactions supported by the evidences. Transaction, you can see, they will say, open the system and see. You are an expert, you see, it is in Tally or in any ERP, you see the transaction. What you can see from a transaction, it's a debit and credit entry. Will you be satisfied as an auditor? One should not be satisfied as an auditor. All right? It should be looked into from the point of from the point of looking into the evidences, like the vouchers. What gives rise to such transaction? Probably you will see just it is a book entry. It cannot be supported by a voucher. Doesn't mean only a voucher signed by a competent authority. Supportings of the vouchers. Voucher says, debit 1 crore here, credit 1 crore there. I'm not talking of that voucher, my dear students. The evidence is supporting that voucher. Okay, keep this in mind for your exam purpose. Very, very important. What gives rise to such a voucher of rupees 1 crore, debiting one account and crediting another GL account? You have to get into the skin of the transaction. Okay, keep that in mind, please. And whether the company, not being an investment company or a banking company, the assets consist of shares, debentures, or other securities have been sold at a price less than that at which it was purchased. It's not an investment company. It is not a banking company. They're holding investment. They are not holding investment for sale. It's an investment. Okay, it's a long-term investment. And suddenly you see that they are being there is a lot of sale of such assets, such investments, and again naturally one has to, and at a loss, probably at a loss, and then you have to go get into the details of such transactions to identify whether that is correct or not, whether that is conducive or that is prejudice. Those kind of things one had to get into. Please remember whether some more, whether loans and advances made by the company has been shown as deposits. This we will discuss further when we go for Schedule 3 discussion tomorrow. I mean the next day, not tomorrow, sorry. Schedule 3 discussion, and whether personal expenses have been charged to revenue account, and where it is stated in the books and documents of the company that any shares have been allotted for cash, whether that cash is actually in the company, cash is actually there or not, received, whether it is actually received in cash as part of that allotment, and where is that cash now. So these are the certain things, there are A, B, C, D, E, F. So there are 6 such subclauses under subclause 1, which an auditor has to review. But for your exam purpose, please remember, these are not required to be reported unless and until found that they are not, they are prejudiced, they are not conducive for the business or operations of the company. Okay, they have negatively impacted the company. The auditor doesn't have to be, the firm doesn't have to report this in the report, the auditor's report. They just review it and keep the documentation. But if it sees that the transactions are prejudiced, they are not conducive for the organization's, company's function, then it should be reported through the reporting as the case may be, which we will discuss in other subsections of the this particular section. Please keep this in mind that they do not need to be reported. Okay. Let's come to subsection 2. Subsection 2, if you have any question, you can post it. I'll answer it. I'm sure you will have a lot of questions here. I will answer slowly if I do not get the time to answer immediately. But I'm going to answer it. Subsection 2 of section 143, what it talks about, report to the members. The right, the responsibility, okay? The auditor shall make a report to the members of the company on the accounts examined by him and on every financial statements which are acquired by, are under this act, laid to the company at the general meeting. So so in a simple word, the auditor's report is reported to whom? The report is meant for the members. And members, how the members come to know of the report? When it is published. They are generally, members who come for the AGM, they are given a copy, or otherwise it is published. For listed companies, it is a mandatory requirement to publish the audited financial statements, and government companies also, they do it. Every government company, government companies are not other than PSUs, they may not be all listed. So unlisted government companies, they also need to publish their accounts, and of course, PSU companies who are listed, they publish, and listed companies, they have to publish. But other than that, it is our responsibility to generally, we always report it for the members. So it is the responsibility of the company to give a copy of such audited, financial statement to all the members of the company who will be present in the AGM. So section 143 subsection 2 talks about reporting, that if we are giving our report, we are making the report to be presented to the members and will be adopted. The reports are adopted by the members in the AGM, isn't it? So that's what is the subsection is talking about. After taking into consideration the provisions of this Act, the accounting and auditing standards, and matters which are required to be included in the audit report, which we will see later on. Okay, so that's our responsibility under our power and rights to report to the members. Keep this in mind. Okay, every year. And then comes subsection 3 of section 143. What to state? So what will be the content of the report? Okay, what will be the content of the report? Whether, basic things that you get to see in the, audit report. If you open any annual audit report, the audit report contains that whether he has sought and obtained. We always write that we have, sought and obtained all the information and explanations sought by us, and which to the best of our knowledge and belief when necessary for the purpose of this audit. These we have to mention in the audit report. And then whether in our opinion proper books of accounts as required by the relevant law have been kept by the company. Next, whether the report of the accounts on the branch offices of the company are audited. It may be audited by a branch auditor, which we will see under subsection 8 of 143. What are the powers of such branch auditor? But as an auditor, we need to consolidating auditor, we need to report that whether the accounts the report is based on the branch audit reports. And especially if it is audited by anybody other than the company auditor. So like say in case of a bank, it is only the central statutory auditor only do the top 20 branches. The rest of the branches are audited by the whatever under the, as per the threshold, it is being done by the branch statutory auditors. But, but the central statutory auditor is actually reporting for the bank as a whole. So in that case, we have to report it like that. Otherwise, it is not coming out whether we are relying on somebody else's work also. And so if a branch audit is not by the company auditor, the main consolidating company auditor, that to that effect, it has to be reported that whether the report on the accounts of any branch of the company is audited by a person by section 143 subsection 8. Okay, and which has been sent to him for his review. And he has considered in the manner he felt it necessary for his main audit. So this language is very clearly given. We have to report it accordingly. So for exam purpose, the inner meaning is this. I hope I can able to relate it, or I can able to make you understand. Now, next is whether the company's balance sheet and profit and loss account dealt with in the report are in agreement with the books of accounts and returns. That's very important. So what it means, it's reconciled. Books of accounts and the balance sheet and profit and loss accounts are all reconciled, right? There is no unreconciled balances. There is no difference between the balance sheet, profit and loss account which you are presenting vis-a-vis the books and records. I need an example from you students. You are aware of this, where such difference may happen, and it is important for an auditor to reconcile it. Very simple. First thing probably you start learning when you start your articleship. Please post an answer. What is such balance that we are talking about here? Please tell me. You are aware of this. Just to practically relate it. Why I'm asking a question for your practical knowledge sake, so that you can answer the MCQ properly. Okay? And also if you are answering the theoretical questions, it is good to give an example that carries a very good weight. So the person who's actually checking your answer paper would be very happy that this fellow knows, the moment you give an example, it shows that you can relate the theory with the practical situation. And naturally, making an examiner happy means getting more number, right? Please tell me. Satrudhan, I am on the right slide only. My slide is talking about 143 subsection 1. So I am there only. I am talking now. I don't have details of section 143.1 on the screen. So you have to listen to me, right? Yes, Gigi, yes, Jose and Ranjit, bank reconciliation. Excellent. Bank reconciliation, which has to be different. The bank book vis-a-vis the bank statement, they need reconciliation. The very reason for reconciliation is that if balance is not same. Okay, and we have to come to the bank balance as per our, books. After such reconciliation, some may be not posted, issued but not, cleared. You may not have accounted for a couple of things which we have to pass an entry, interest and things like that. Yes, absolutely correct. This is what I was looking for. Very good. Very good. Okay. So such reconciliation are important, that they are not out of balance. They are all, in agreement with the books and records. Very good. The next important is we have to opine, we have to give an opinion that whether the financial statements are, complied with the accounting standards. Accounting standards. Very important today. You are learning Ind AS and also the statement should be drawn up accordingly, and whether the accounting standards have been followed and not. Okay. And, not only whether the statement has been prepared as per the Schedule 3, but whether the accounting treatments underlying those balances have been in compliance with the auditing standards that we are following these days, whether it is an earlier accounting standards or Ind AS, because accounting standard Ind AS is not applicable to several category of companies even today as we speak. So though they have to comply with certain accounting standards, the earlier ones, and otherwise they have to comply with the Ind AS. All right. The observation and comments of the auditors and the financial transactions or the matters which have any adverse effect on the functioning of the company. So we have to mention that. Whether any director is disqualified, we have to mention that. Any qualification, reservation, and now comes the qualification part of it. Okay. So that report, how the reporting will be done, we will discuss. We will be discussing CARO in detail. So there we will discuss. So for the time being, section 143 subsection 3 talks about basically that if there is an adverse comment, we have to put that whether through qualification, whether through emphasis or disclaimer, that we have to decide and appropriately put into the audit report with appropriate, wordings, for which we also have the guidance. We have several guidance on that. And we must follow that. We should not have to use our own language. Okay. and whether the company had adequate internal financial control system. Now, the audit report, when we go to audit report, you will see that this is given. Whether the must please look into the subclause under subclause 4, that we as an auditor, it is auditor's responsibility is to give a statement or an opinion whether the company has adequate internal financial controls over financial. See what we are reporting. This calls for a little explanation. I don't know how much you are aware of, but let me explain it to you. We are giving our opinion on the financial statements, right? We have discussed this in other classes too, but maybe for the last time, that we are expressing our opinion on the financial statements. The financial statements are prepared based on certain transactions, based on certain operations, So, how those operations took place, whether they followed certain, because those operations have some risk associated with it. How are those risks controlled? Those are the things we need to identify before we can give any opinion on the true and fairness of the financial statements. You are just not, please remember, we are not just mere giving our signature on some figures. No, how those figures were compiled, how those figures were, came to being, those are important things. How are they compiled? Why are there adequate controls in place in compilation, in generation of the transaction and then compilation? So if not, there is a risk that the internal control systems are not adequate. I'll give you a small example to simplify what I'm saying. The company is having a good ERP system in place, say SAP ERP they are using, okay? So, they can generate the financial statement from the SAP directly, and you tend to believe by talking to the client, they said that yes, this financial statement which the balance sheet and profit and loss account with additional notes and everything which they have given it to you, they had been generated from the system automatically. After passing the correct entries or everything, it has been generated from the system. But actually, when you actually did the audit, you found out that yes, they were extracted from the system, but they were downloaded in Excel file and then they were reformatted, or probably the system did not give in the format that is expected, not in Schedule 3 format, right? The format was not as per the current requirement, and hence what they had to do, they downloaded the statement. The statement is still showing in T. Balance sheet is still being extracted in T format, which you cannot give today. And so that's been manually done in Excel. There is a risk. I'm not saying that, it is completely out of control, but there is a risk involved. I'm sure you will be able to appreciate because of the manual intervention. By mistake, there can be some errors in the figures. So can you understand the significance of that manual mistake? If it could not be identified, the auditor, it could be a material misstatement, and an auditor is going to be proven guilty of misconduct under several laws and acts that we are reading. It's very, very scary. So an auditor has to understand, the background of generating those financial systems and data, financial statements on which he is basically going to attest. So it includes the various processes, and how those processes are done, whether through system, third-party systems, manually. So that's what we are talking about, the internal financial control systems in place. Okay, so this is a separate task altogether. This is completely a separate task altogether, which is the responsibility of the management, the company management, to give a report on the internal financial control system, and the statutory auditor he has to, or the firm has to, make a judgment whether that report on the internal financial control systems calls for any, qualification or emphasis. Whether that auditor is giving some report which may give rise to, some negative, may give rise to negative situation which will adversely affect the company. So that's the judgment of the statutory auditor. But please keep in mind, a statutory auditor cannot do the statutory audit as well as he cannot do the, work of the internal financial control systems. I mean, practical situation is different. I will not go into that, but it is not correct on the auditor to do that. In 100% cases, you will see that the statutory auditor doesn't sign. He cannot sign because he will be disqualified. But many times what happens, he suggests somebody else or he helps them. That is fine. Helping is fine, but he should not prejudice. He should not force, or the company should not force the statutory auditor to ignore. So it is very, very significant since the, inception of this act, that internal financial controls over financial reporting is taken care of seriously. And because simple thing, the auditor has to report separately as a annexure, has to report it to the members, that whether the control mechanisms are correct. I have been telling you in one of the classes that if we cannot, if a situation is not such that you need to emphasize or you need to qualify, then, but we want to bring it to the notice of the members. Where do we do that? This is the area where we can voice our concern. Everything which is not material doesn't have to go to the audit report in form of qualification or emphasis. All right? But if such situations are there, which to your understanding and belief, that if such controls mechanisms are weak and they need to take care of immediately over a period of time, and if not taken care of, it's going to give rise to a situation where the audit report will be qualified. So such kind of comments can be, or control issues, risks can be identified in this area. So that's what I'm saying, the subsection of this particular subsection, subsection 3 of section 143 talks about the internal financial controls over the financial reporting. And last in subsection 3 is any other matter that may be prescribed from time to time. Okay. So that's the content. We will discuss further as we go along. And the qualification and whether any of the matter, subsection 4 talks about whether any of the matters required to be included in the report under this section is answered in the negative or with a qualification. We need to report that in the auditor's report with a qualification or emphasis as the case may be. Okay. So we move on to subsection 5 of section 143. It talks about the government companies. In case of government companies, the CAG shall appoint auditor under subsection 5 and 7 of section 139 we have seen, and direct such auditor. Now the CAG can direct the auditor the manner in which the accounts are to be inquired into. Alright, but not to forget our auditing standards. Not to forget that. We need to consider also the auditing, the procedures which government may come from time to time come out. We should be knowing about that. But that doesn't mean that we will not follow the auditing standards prescribed by the Institute and enacted under Companies Act. It doesn't mean that. All right. Only apart from those areas which are not relevant, say accrual part of it. Okay. So if it is not based on accrual based on accounting, so that part is not taken care of. For that, it is cash based. So accordingly, accounting standards and to the extent auditing standards, if any are applicable, will apply. Okay. So we must take into consideration that all the standards which are to be followed will follow along with the specific requirements of CAG, who may come out with such requirements. Okay, we need to follow that too. And we have to report it to the CAG in case of government audit. Yes, we had to report it to the CAG, and including the impact analysis of any such audit findings. That's a normal, but only subsection 5 is talking about additional things that CAG might tell the auditor to do. But please remember, for your exam purpose, this doesn't mean that we will not be following the other auditing standards. No, we have to follow. And of course, accounting standards apply wherever applicable. So, subsection 6 talks about the CAG's power for supplementary audit. CAG may, within 60 days from the date of receipt of the audit report, that normal statutory audit report, conduct a supplementary audit of the financial statement if it gives, some qualifications, some negative impact that an auditor might have identified and reported to CAG. CAG can, start a special audit, a supplementary audit. It can be done by own inspectors, can be by the other auditor also. Okay. By any such person or persons as he may authorize on his behalf. Okay. And for the purpose of such audit, required information or additional information to be furnished by any persons authorized on such matters. So it has to be given. It has to be given to the auditor or the inspector, as the case may be, as directed by the CAG. And it will also comment upon the supplementary such audit report. Naturally, we have to give an audit report, provided that CAG, on receiving the such supplementary audit report sent by the company, or every person entitled to copies of audited financial statement under whatever section we have, it should be placed in the AGM. If it is a company, if it is a public limited company or whatever, CAG, it is a CAG. Basically, it's not a public limited company. I correct myself. It's a government company. It's a government company, and the auditor is appointed by the CAG. In such case, it has to be also taken to the placed to the board. That report for the supplementary audit report. And subsection 7 talks about test audit by the CAG. They may also, CAG can direct that they should have a test audit apart from the other audit that is being carried out by the normal statutory audit or things like that. If they feel it necessary, order a test audit to be conducted on the accounts of such company under the CAG's Act, Section 19A of the CAG Act. So that they can do, and again it can be done by the inspector or auditor as directed by the CAG. Okay, and you please remember that if it is given to the member in practice or a firm in practice, it has to be CAG empaneled. CAG empaneled. Otherwise, a government audit cannot be done unless and until one is a CAG empaneled. Section 143A talks about the branch audit. As we said, we have seen the branch audit, that reporting contains the branch audit. So branch audit can be done by a different auditor altogether, like in case of the bank or in case of large government audits, large PSUs, branch audits are done by separate auditors, and there is a central auditor. So large PSUs, all they have, large government companies, all they have, whether it's a PSU or not, they generally have a central auditor and several branch auditor. Okay, and where a company has a branch, accounts can be conducted by audit can be conducted by a branch auditor, again appointed based based on the various acts and the sections that we have, various section of the Companies Act we just learned, okay, or just revisited. So the disqualification, appointment, reappointment remains the same, but they simply work as a branch auditor, okay, and the report goes to the central auditor. So, I mean, it is ideal that we send the branch audit directly to the central auditor instead of through the company or the branch, okay. And our power of the branch auditor will be decided based on the scope, and it remains more or less same, that he should get access to the books and records, and he has to report. But here, the only thing, remember, he doesn't report to the members, okay. He doesn't prepare an audit report. He has to prepare audit report actually. Branch auditor actually has to prepare an audit report, full-fledged audit report, Caro report and all that, but he doesn't give it to the members. It gives to the central auditor, okay, who would consolidate and prepare one report for the members. That's the only difference, okay. Keep that in mind for exam purpose. Any question, please post it. And subsection 9 talks about compliance with the auditing standards. Goes without saying that we have to, an auditor has to follow the auditing standards for any audit to the extent they are applicable. And in most of the cases, certain things are applicable: risk assessment, risk mitigation, planning, etc., everything are applicable to most of the audits. And subsection 10 talks about compliance with government auditing standards. That I was talking about. That CAG might tell you, that separate things, certain other things that you have to do other than the auditing standard as pronounced by the ICAI. They may prescribe, central government may prescribe auditing standards and any addendum thereto as recommended by the ICAI. So, they are giving addendum to the ICAI's auditing standard. So, so what does it mean? That government companies also follow these standards which are actually given out by ICAI. It is in concurrence with the government. It is in concurrence with the government. Apart from that, apart from the auditing standards as pronounced by ICAI, they can give some addendum, some additional new. Okay, but they are not saying that you don't follow ICAIs. That's the fundamentals. And along with that, they can have some additional. Please keep this in mind for your exam purpose. Okay. And subsection 11 talks about the NAFRA, that central government may, in consultation with the National Financial Reporting Authority, which is NAFRA, by general or special order, direct in respect of such class or description of companies as may be specified in that order. So central government, along with after consultation, or the NAFRA might have approached the central government, and both in consultation may direct, in an order, the audit report shall also include statement of such matters as may be specified. That you give us also reports relating to this. They might, if they have reason to believe something is wrong or whatever they feel like, so the both of them can come together and make a decision, and then can direct the auditor to put certain things in their audit report. That is all about the subsection 11 of section 143. Spatial report as per central government and NAFRA requirements. Okay, keep that in mind. NAFRA is basically, as I said, it is a separate body overlooking the professionals in practice. Okay, accountancy profession, and of course the it looks into the auditing standards, auditing standards, accounting standards, everything it looks into, takes into consideration, and if it is believed it is that something is not according to the standards, they might also ask the auditor to review it and report it to them in particular manner. And not to forget, they are also looking into the way the professional accountants are doing their job.
Ma'am, we need to wind up in 5 minutes.
Okay, another 5 minutes. I'll Students, I will not start. Okay, I'll just touch upon the fraud. We have to wind up 5 minutes early today, my dear students. Don't worry, we'll make it up. Whatever is there, everything will be covered in the next 2 days. To the best of my knowledge and your, coverage as given, we will cover everything. So we'll just touch upon a little bit for 5 minutes on section 143, subsection 12, fraud reporting. Fraud reporting as that in case if an auditor of a company in the course of the performance of his duties as an auditor has reason to believe that an offense involved, you have to read this. The words are very, very important. I mean, the belief, how the belief comes. You see the intricacies, inner meaning of the words, and that's what not only a student has to remember, we have to remember too. For the timing, the students, you must remember, it is saying that the auditor in the normal course of his performance of the audit of his duties and as an auditor has reason to believe. How can you believe something without any evidence? You have to believe something when something is actually practically going on, which is there in substance, in matter, not something lurking in the, in the cloud. Except for the pandemic case where we do not see the virus, but virus is there. But that the conclusive evidence is that people are falling ill. You don't need to see the virus, right? So it's an evidence. We need to believe. How we believe that, things are going up or going down based on the reports. So there is a reason to believe. So that's very important word. A reason to believe that an offense involving fraud. Fraud is described in section 447. So reason to believe that fraud is being or has been committed against the company. So where the fraud, so these are important. I have highlighted it later on during the other slides. And you must remember, must read on those highlighted words that the offense, the auditor has believed that an offense, in nature of a fraud has happened, on the company. Who has committed it? By officer or an employee of the company. Okay? By an officer or an employee of the company, then it is falling under the section, subsection 12 of section 143. Okay? For this particular subsection, this is the definition of fraud. Remember it. You may ask what happens when an auditor, is colluding. We'll come to that. So what is saying fraud under subsection 12 of section 143, that an auditor has a reason to believe that an offense involving fraud is being or has been committed against the company by officers or employees of the company. He shall immediately report the matter to the central government. You remember we discussed in Code of Ethics, that it has to be reported within 60 days, right? So we give 15 days time to 45 days, 15 days, 45 days we give it to the management, and within receipt of such, clarification from the company, we report it within 15 days to the central government, right? To the MCA. So that's what we are talking about. So please remember, for this subsection, it is meaning that there is a reason to believe that fraud has been committed or is being committed on the company by officers, by member or by officer or employee of the company. Okay? If such case has happened, it needs to be reported immediately to the competent authority as required by the subsection 12 of section 143 of Companies Act 2013. I think with that we will close today. If you have any question, I'll take it. Otherwise, we'll close today and we'll take up in detail from next day again. BRAs, GL, yes, very good. Subramaniam, GL subledger reconciliation, absolutely correct. Dated balance confirmation, so Trudhan, very good. Yes, very good.
Ma'am, we need to wind up.
Okay, my dear students, let's wind up today. Have a good day. I'll see you again day after tomorrow, and we'll continue with the fraud reporting under various section of Companies Act. Thank you very much. Thank you.